Good morning. It's the Wall Street Weekly Wrap Up, June 8th, 2024, with your host, John Newquist. And kind of a crazy week for a few stocks. Let's get into it. It's not Lockheed Martin, but I thought, $1.9 billion contract, that's like a lot of money. They're going to be selling, making a new plant for the missiles, the artillery shells, really. And out in Texas is going to do well. And they're all going to go over the Ukraine. But the stock has kind of been bouncing on this tough ceiling to break. Everybody's waiting for it to break, and if it can break through this barrier, probably going to be a good run for it thereon. And of course, we can't go a week without talking NVDA, right? Jensen Wong just went to the conference at Computex and said, not only do we have our, regular chips, Blackwell's coming on, we're going to be profitable this year. It's going to see it online. And he talks about the Rubin chip will come out the year after that. And people are like, wow, they're thinking like 3-year cycle, and now it's talking every year it's going to have getting better. It trades at a 10 to 1 split Monday. So we're at over $1,200. That means you're going to get 10 shares at $100 if you just had one share. And that's going to be good. But there's a lot of splits in history, but this one is so similar to Qualcomm back when it did a 4 to 1 split. It shot up over $1,000, and then once it split, it dropped about 20%. So I fully expect your $120 share to probably go down $100, maybe even $90. So you would, if you were trying to know this, you would try to put some puts and hedge your position. We're in it for the long time, so this is the number we're looking at, about 950. It could retrace. Remember, this is, I call the hype of the split and everything else. How much does this news over here factor in? It does, but there are a lot of momentum players in NVIDIA, and but it's good, and the revenues are good. The forecast is good. This is a 5-year trend. They can't build these data centers fast enough. They want to be able to do faster data analysis. I was listening to one of the people talking, like, if you do remote work, 3 years, there'll be AI doing it for you. You won't be doing it. If you can do it on remote, you probably don't need that person. Think about it. Wow. And then the averages. NASDAQ's starting to run now. For a while, the S&P was the leader. Here's our QQQ charts. Boy, that's a beautiful chart. Since the lows of the November, it's been kind of going up. This is a good slope, good chart, and it looks good for the NASDAQ. Again, with NVIDIA being now the second largest company with $3 trillion market cap, we could see this drop if NVIDIA drops, because NVIDIA is such a big chunk of the NASDAQ as well as the S&P 500. It doesn't affect the Dow because it's not in the Dow yet. They had a chance when I recommended kick out IBM and put NVIDIA in, but no. Natural gas. This is one that I decided to pull it sharp because, okay, oil's 70s. That's good for us if you've got gasoline. Gold's still hanging in 2300s. Silver's a little bit below 30. Copper's, solidly at 450, 447. But look at this. Natural gas broke out. Now, really, we got plenty of natural gas, so that's why it's always been mystery, thinking about why we do it. When it got up here, it says, yep, it'll go below $2, and it did. And it was there for months, and now it's shooting up again. I know Europe's trying to stock up. Gas was cheap. Let's stock up when it's cheap. Put our stuff in there so we can make it through the cold winter. But we'll see. I mean, a lot of the backup generators are using natural gas. I sat down with one of the big natural gas companies. They've had to expand their infrastructure because reliable electricity at these data centers is important. And if you have natural gas generators, I mean, we're talking a lot of these Kohlers, Caterpillars, Generacs, they got to be supplied with natural gas, and they're going to be running it. It is going to be important. You cannot have that data not accessible or not working. So that's probably, a little bit of it, but it seems kind of high. I don't think the data centers are going to use that much natural gas. It's just backup generators, which on a good grid should not affect anybody. CrowdStrike, the security companies have all had ups and downs, and they've kind of shook out. CrowdStrike is now clearly the company that's leading. 33% revenue drop. Nobody in the security sector matches that, and is good. Um, it's going to join the S&P 500. That's going to help it too. So here we are. We've got a stock now. It's been moving sideways. So, as I would say, if you're going to get into it, not a bad time to get into it because it's kind of digested the gains from September. And we're not in it. We got a lot of tech already. So, but I am watching it, because it is good. I just always have this fear if it goes like Palo Alto and other ones that start to miss the quarter, it's in there. I mean, you keep on growing revenues 30%. Who's buying it? Are you taking share away, or is it, margins are going up? I'm not sure. DOJ is going to look at NVIDIA, Microsoft, and OpenAI for dominance, potentially monopoly issues related to it. I call this, let's go fishing and hope we can find something. This is crazy. I mean, yes, NVIDIA did it, but Altman and OpenAI, this was years ago. They were planning for this, and they got the stuff in there years ago. So the fact that NVIDIA's demand can't keep up is not antitrust, is not monopolistic. Intel makes chips. Samsung makes chips. So this just seems like a waste of time for everybody. I don't really see what the harm is so far. It's still a free market. You have a lot of companies making chips. It isn't just NVIDIA. But, you're rewarding somebody that's doing an outstanding job, and let's get somebody in there to slow it down. That's, almost what it sounds like. Jobs, hey, we're up above 4 for overall. And I from 3.9. And it's positive for the market because they're going to look at it as that if the unemployment rate goes up, the wage pressures relieve a little bit, because there's more competition for it. I just saw this chart by BLS, by, demographics, and, it ranges, if you're more than one race, which is odd, you have the worst unemployment rate. And I just don't know how many people are in that group, but I thought that was kind of odd. And, but, what I would always look at is, what is the high schoolers versus college and other people. And I would like to see them put the trades in there because the trades are super hot. If you're an electrician and you're good, you've got plenty of choices to where you want to work. So, this is kind of nice, but it's, just one slice of the data. GPCR, I'm watching all the GLP-1 stocks, and they got a top-line phase 2 study, which you can see this big green spike when that came out. You can almost tell the day. Broke the downtrend, still below its high. Oral GPL1, no more injection. It's got to pass phase 3, and that's the real tough thing. I mean, Pfizer didn't make it past phase 3 with its pill. So this is one, if you want to nibble, you want to add some to it, that's not bad. And if it does pass phase 3, we expect another big jump up there. I don't know if we're going to see it go. It might go sideways for the rest of the time until phase 3 is over. Year, 2 years, whatever it is. So it's just a stock to keep an eye on. I always tell people, buy a little of it. Just buy a nibble on it. Don't go out there and, buy the whole thing because you don't know what's going to happen. I mean, if it's $53 now and it fails phase 3, it could be $5. That's what you're risking. I mean, high loss, but if it passes phase 3 and it works and people lose like 14% from a pill, then they're going to be bought out. There are people who are big like Pfizer, Merck, and everybody else that are watching this. And somebody's going to say, hey, how much does it take to buy this company out? We'll take a shot at it, And they're going to dig because this is a hot area for the next 5 years. GameStop, Roaring Kitty comes back, and we shoot it all the way up to $65. Heaven forbid you bought it at there. I mean, we went from, they started buying the call options around about 15. So, it goes back down, and it almost gets down to, a little bit below 20. And then he's going to go out and do a YouTube video, and GameStop's going to come out with earnings which are just flat. GameStop is like, there's no purpose, anymore. The kids don't go there as they used to. I mean, I remember taking them, what's the new game you get at GameStop? Now it's all downloaded. They're buying and trading old games. That's fine, but that's not millions and billions of dollars. I mean, I just don't know unless they make their own games, what they're gonna do. So he's gonna do the YouTube video on noon and Friday, and it got up to $45 again. He's posting. At the time, I think I remember the post on Thursday before the announcement. He was at $500 million of GameStop, and of course, he's probably lost about 200 million of it. There's faith in that, but you want to buy this, it's brutal. This is brutal. When you get a choppy chart like this, you can get lucky, but you better sell when you make the money, and you better get out real quick when it starts to drop, because you put in X amount of money, you could be at half of that money the next day. I mean, it's just brutal when you want to get into it. I call this like the casino of the stock market. People are just buying it, trying to be in it and say they own it. But, yesterday I had dinner with one of my friends. I bought 30 NVDA at $199, John. Jeez. And it got up to $1,200. John, this is like a lot of money. And it is. You go from $6,000 and that thing shoots up, to 36,000. That's 30,000 real money, for a person that's, an average worker. That's a lot of money, So, I told him, I says, it's going to probably drop, but no, I'm going to stay with it. I think this is going to be, and like I said, we write our winners. We've wrote it, and that's how we've made a difference. We didn't sell it. I mean, I watch all those people on CNBC. Oh, we sold it for 20%, 30%. We're just riding them because that's the way you make the money. We look at the week, because you always lose track. Everything's about the day, how the day went and everything, or what is the year. I like watching it the week. Okay, NVIDIA up, look at this, 10%. Meta, 5%. Amazon, 4%. Well, hey, those are our stocks. Those are pretty good. Microsoft up, Google up. We don't have Apple, and we don't have Lilly, and we don't have Boeing, but Boeing, like I said, they shot the rocket that people finally cheered that something actually got good news out of it. The oils, of course, are down because the oil is still below 80. So, but overall, a good week. I mean, the biggest positions did well, and that's what's important. That's why the Nasdaq is now over the S&P 500, and it's a lot of that. And we have to make sure that we get the best in each sector. We're diversified. Some people, like I said, they're all tech right now because of NVIDIA. And that's a risk that you have to think about, because going back in the old days, 2000, you didn't make a mistake in 97, 98, 99 buying tech, but boy, if you held in 2000, you got a whipping. 2001, 2001, you got a 40% drop and another 40% drop. And so, if you just say, if I did $100,000 at 2000, I dropped down 40%. That means I have 60,000. Then I dropped down another 40%. I just lost 24. I'm at 36,000. Then I lost another 40%. You can see what I'm saying? That was a brutal lesson for all the tech bulls back then. So I'm always watching them. That's why I believe in the diversified portfolio. Yes, you don't make as much if you were all tech when the tech is hot, but this cushions you, and that's why we want to have financial discipline. With that, let's take it easy. Have a good week, and I'll see you next week.